Most people are still looking at Palantir through the wrong lens. They're not asking if the business is getting stronger, they're asking if the stock is too expensive. And what they really mean is, it's not as cheap as it used to be. That's how most people lose. They anchor to a past version of the company and ignore what it's turning into. They compare today's price to a time when the product wasn't proven, the model wasn't working, and the opportunity wasn't this big. They're not buying the future, they're still obsessed with the past. But here's what smart money knows. Price only matters relative to strength. If the business is getting more dominant every quarter, the idea of overpriced becomes a distraction, a mental excuse to do nothing. That's what's happening right now. People are treating Palantir like the story's already been written. But this isn't the end of the chapter. It's the start of a new one. And most of the market hasn't caught up. Not in how they value it, not in how they model it, and definitely not in how they understand what this company is actually building. That disconnect, that's where the opportunity is. Because what Palantir is doing right now, underneath the surface, is shifting the AI stack, rewriting the software playbook, and stacking advantages that don't go away. Most companies will never grow like this. Not in a year, not in a decade, not ever. Palantir just did it in a single quarter. U.S. commercial revenue up 93% year over year. Let that sink in. This is not a startup going from 10 to 20 million. This is a billion-dollar segment of a publicly traded company doubling at scale. You don't do that with sales tactics. You do that when the product solves a painful problem better than anyone else. And once you're inside the organization, they don't rip you out, because ripping you out breaks everything. This is what high leverage growth looks like. They're closing, they're expanding, they're locking in revenue that doesn't just show up once and vanish, it stacks. They didn't just win 157 enterprise deals this quarter. 42 of those were over $10 million. That's not sales, that's conversion. That's a sales engine moving like a freight train with a product market fit behind it. Most investors still think this is some overpriced AI hype play. But let me ask you something. Does hype close contracts that size? Does hype drive a 145% increase in remaining deal value? No. You hit those numbers when your product is the infrastructure, not the add-on. This is what happens when a company stops selling itself and starts selling certainty. When buyers know that walking away will cost them more than signing the deal. Palantir isn't trying to prove itself anymore. They're onboarding the next wave. If you think this is priced in, you haven't been paying attention. Here's the part nobody wants to admit. Most companies in this space are playing for attention. Palantir's playing for contracts, and they're stacking them. This quarter, they closed 157 deals over $1 million. That alone would be impressive, but it gets better. 66 were over $5 million. 42 were over $10 million. That's not marketing, that's dominance. That's walking into a boardroom with the strongest software in the building and walking out with signatures that turn into recurring revenue. You don't close 42 eight-figure contracts unless your product is mission critical, unless the customer believes three things. Number one, they need it. Number two, it works. And number three, nobody else can deliver it at the same level. That's what's happening here. These deals don't come from hype. They come from hard conversations, internal vetting, budget approvals, security reviews, compliance teams, and the CFO asking, are we actually going to use this? And the answer is yes, over and over again, across industries, agencies, and verticals. The scale of these contracts matters because the bigger the deal, the deeper the integration. And the deeper the integration, the harder it is to leave. This is how moats are built in software, not by patents, but by becoming the operating system for your customer. And when you do that, renewals aren't even a conversation. They're a formality. So if you're still thinking this is just an AI demo company, explain the 42 companies that just wired 8 figures for access. I'll wait. Everyone talks about growth. Very few talk about how much it costs. Palantir doesn't just grow. It gets more profitable as it grows. This quarter, they pulled in $569 million in free cash flow. That's a 57% margin. Read that again. Not revenue, not adjusted EBITDA, cold, hard, unlevered free cash. Over half of every dollar that came in went straight to the bank. This is what it looks like when a software company has leverage. Not just operational leverage, contractual leverage. Their customers aren't buying licenses, they're embedding the product, which means they don't churn, they expand. This is not SaaS math, this is enterprise control. Most companies pour money into sales and marketing to keep top-line growth alive. Palantir is stacking wins and dropping more to the bottom line. That's the definition of compounding. If the product didn't work, they'd have to outspin the problem. They're not. If the sales motion was inefficient, margins would collapse. They're not. They're scaling faster and getting stronger per dollar. And don't forget, this is with zero debt and $6 billion in cash. That means no one is financing this. No one is subsidizing the business with hope. This is self-funded dominance. You want to know if a business has power? Look at what happens when you stop giving it money. Palantir's not bleeding, it's overflowing. So when you hear someone say the valuation is too high, ask them this: what's the multiple on a business that keeps compounding revenue and cash flow at the same time? Exactly. So let me be blunt. Most of the AI out there is garbage. It looks good on slides, it makes investors feel smart, and it doesn't do a damn thing. You want to know what works? Software that saves time, cuts costs, gets real work done. That's what Palantir's AI platform is doing right now in the wild. Landa Frost used to spend 40 hours on production planning, now 30 minutes. Fannie Mae cut mortgage fraud detection from months to seconds. The U.S. State Department dropped a 60-day process to 12 days. That's not a test run, that's value. And here's what most companies still don't get. AI is useless unless it connects to real systems, real data, real operations. You can't just bolt on some chatbot and call it transformation. Palantir didn't build a toy, they built a friggin' backbone. That is AI that ties into your workflows, your decisions, your margins. And once it's in, it stays in. Because the more you use it, the more useful it becomes. You're not just buying software, you're building leverage. Here's how you know it's working. Nobody's canceling, they're expanding. This isn't a flashy product, it's an operating system. One that replaces 20 tools, 15 vendors, and half of your internal development team. The companies that adopt it don't leave because they can't afford to go back to broken. So when people say AI is moving fast, they're right. But Palantir's not trying to keep up. They're already deployed, embedded, and paid. That's the difference between a company chasing the future and one building it. Let's not dance around it. The bull case on Palantir is obvious. The company is growing fast, throwing off cash, and building a software stack that locks in customers for years. The bear case, it's lazy. It's just a chart and a multiple. This stock is up 120%. The PE is too high. Cool. High relative to what? 2021? A quarter where they weren't profitable? A business that hadn't locked in billion-dollar contracts yet? You see, that's the problem. People are clinging to old numbers because it's easier than doing new thinking. Let's get serious. You've got 93% US commercial growth. You've got 57% free cash flow margins. You've got a customer base that's expanding faster than most SaaS companies can onboard. $6 billion in cash, no debt. And people are worried about a valuation? This isn't priced for perfection. It's priced for people who aren't reading earnings reports. And the bear case, it died 2 quarters ago. The only reason it's still floating around is because most investors aren't anchored to what the stock used to be instead of what the business is becoming. This isn't speculation anymore, it's execution. So here's how this plays out. Either the market catches up or the stock keeps grinding higher while everyone on the sidelines argues about how expensive it is. That's not a debate, that's denial. So pick a side. You're either betting on momentum backed by fundamentals or you're sitting out because you can't let go of a past version of the company that no longer exists. Either way, the train's already moving. This quarter didn't surprise me. It validated everything. People think this earnings report was the turning point. It wasn't. The turning point already happened. This was just the proof. And my bullish thesis, it didn't just hold up, it got stronger. Palantir isn't a maybe, it's a machine. It's printing margin, locking in contracts, accelerating where it matters, with enterprise customers, not just press releases. The market's playing catch up, I'm not. That's why I'm overweight Palantir stock. That's why I'm not trimming. That's why I've been selling cash secured puts for consistent premiums. And if I get assigned, I'll wheel the shares or hold them. I'm not chasing price, I'm tracking progress. Because here's what matters. The business is stronger than it was last quarter. The numbers are better, the product is deeper, the adoption is wider, and the moat is more obvious. This is what most people miss. They want confirmation from CNBC or analysts before they act. They want the multiple to compress. They want a safer entry. But guess what? There is no perfect entry for a company that keeps compounding. If you needed to feel safe before you buy it, you'll always be too late. I'm not waiting, I'm building, with discipline, with strategy, and with conviction that's backed by execution. The stock's already up. The business is just getting started. That's not hype, that's the data. So let me ask you something. Who else is breaking down Palantir's execution quarter by quarter while actually showing you how to build a position in real time? Who else gives you both the bull and the bear case, lays out the thesis, then backs it with trades that are actually making money? Nobody. That's why Palantir is my largest position. I've got heavy exposure, and I'm still selling puts to stack premium. My thesis was already bullish. This quarter made it stronger. I'm not trimming, I'm looking to add. And it's not just me. I passed $2 million in profits this year. It's only August, and I'm up over 58% year to date. This isn't theory, it's execution. And inside my Patreon, people aren't watching charts, they're pulling income. Pello Market made $5,800 last month, his third month trading options. Another member cleared $6,654.82 in July alone, stacking exits like a machine. And another member joined the Diamond tier 3 weeks ago, made 3 investments, and already covered the full annual fee. The next 49 weeks, pure profit. You can't fake that. Here's what you get inside. Real-time trade alerts with breakdowns, entry, exit, and why. Daily market analysis that cuts the noise. The exact strategies I'm using to scale a 7-figure portfolio with options and momentum. It's $30 a month. Most people spend more than that letting Netflix autoplay. This could actually pay you back. If it doesn't sharpen your strategy, grow your account, and give you more confidence in every deal, cancel anytime. No pitch, no pressure. But if you've been watching this channel, nodding along, telling yourself I should join, this is your moment, because the truth is simple. You can scroll or you can scale, but either way, don't say you weren't told.